Stocks sank Friday, but the GameStop frenzy continues. Earlier this week, a group of independent traders made a coordinated effort to drive up GameStop's share price. The popular trading app Robinhood then barred customers from buying any more, but on Friday allowed limited purchases of the stock again. Vladimir Duthiers has been tracking it all.
What began as a social media skirmish has exploded into a debate in Washington and on Wall Street over who makes the rules and whom they apply to.
They call themselves Robinhood, which, I mean, take from the rich and give to the poor. They did the exact opposite today.
Thursday, discount online brokerage Robinhood barred users without warning from buying new shares of GameStop. In recent weeks, small investors, driven by momentum on the Reddit forum Wall Street Bets, have sent the stock price soaring by over 1,600%. Critics, including Barstool Sports founder Dave Portnoy, who himself owns GameStop stock, allege the brokerage did it to protect hedge funds and other Wall Street institutions, hoping to profit by betting against the company.
What if they say, look, the valuations of the stock where the price was, it just wasn't sustainable?
Nobody's going to debate that the price of GameStop or any of these others were fair market valuation. Everyone has skin in the game. But now, when the retail guy, the everyday Jimmy and Joe, when they're winning, suddenly the rules change.
But Robinhood CEO Vlad Tenev denied any foul play, saying the move was aimed at protecting the firm and its users.
We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants.
Lawmakers from Democrat Alexandria Ocasio-Cortez to Republican Ted Cruz have blasted Robinhood over its GameStop trading freeze.
I think the forces that regulate the market, whether Congress, more importantly the SEC and the exchanges, need to understand these dynamics.
Jacob Frankel is a former SEC lawyer. He doesn't think new regulations are required, but does believe the industry must adjust to its new reality.
What does it mean for the future of trading?
It means that the SEC and the markets, in some respects, need to recalibrate. The markets are looking at something that they've never experienced before.
Robinhood says it will continue to monitor the situation and make adjustments as needed. Faced with a high volume of trades and demands for cash, the company announced last night that it raised more than $1 billion from existing investors, which it called a strong sign of confidence. Vladimir Duthiers, CBS News, New York.
For more on this, Katie Stockton joins me now. She is the founder and managing partner of Fairfield Strategies. Katie, thanks for joining us. So we just heard an explainer from Vlad about what's going on. But for most people, they're watching all of this and trying to figure out and wrap their heads around, first of all, just the very basics of it. So I'm hoping you can explain to us how GameStop has been shorted and why these small group of investors have been propelling its stock prices through the roof.
Well, GameStop came into this month with a very high short interest, which means that essentially hedge funds and other institutions were making a bet that GameStop would go lower based on the fundamental posture of the company. They didn't believe that the company had good prospects, and they borrowed the stock and sold it to the market. And that creates a situation in which they have to buy it back and give it back to their lender, essentially. So it created a situation where the stock was very vulnerable to a short squeeze, which is exactly what we've seen this week, which occurs when the stock gets run up by buying interest. And then all of these so-called shorts have to go and rush out and buy the stock back and cover their positions. And of course, this is an extreme example, and it shows that the market is very skittish right now. A lot of volatility, not just for GameStop, AMC, and the like, but really for the broader market. So we saw an impact on the major indices with this price action.
So, Katie, it seems like the group on Reddit felt that they liked GameStop. They wanted it to continue, and they didn't like that these big hedge funds were planning on shorting their stock and seeing the demise of a beloved company for them. So what's wrong fundamentally with these individual investors pouring their cash in to propel and boost GameStop's stock prices?
There's really nothing wrong with it. It's really just their opinion, right? I think that the issue is more about Main Street versus Wall Street. I think the motivation behind the buying was somewhat suspect in that it was trying to hurt the hedge funds that were very highly exposed to this position. So that became a bit of a, fuel to the fire of this so-called short squeeze. And you can't really get in the heads of the folks that really drove this price action from Reddit and beyond. But what we can say is that it's probably not sustainable. Once these short squeezes are over, they tend to end in dramatic fashion. And I think that will be the case this time around. We'll always see short squeezes. Now I think what it makes us do is respect the fact that the retail investor really has a voice through platforms like Reddit and other social media outlets. So now Wall Street is having to respect Main Street perhaps in a way that they didn't before. And it did create some losses for a lot of big funds. So that's, of course, hard for them to bear. And yet the retail investor has a right to be able to purchase these securities. I don't think there is a major conspiracy surrounding Robinhood. I think it's more of a liquidity issue that they face. So I wouldn't look too much into that. And I think now going forward, these companies or
Katie,
brokerages will be more prepared for that kind of situation.
I want to pause you there because, as you're saying, you don't think that Robinhood was necessarily trying to limit people's ability to trade GameStop stock, rather. GameStop stock is a difficult thing for me to say tonight for some reason. But you said that you thought it was a matter of liquidity. Can you explain that for our viewers?
Yeah, I mean, I do think they were trying to limit it, but because they would have issues in terms of settling these trades. Trades have a way that they settle a couple of days later, and they need to cover that using cash that they probably did not have. I can't tell you anything about Robinhood's business except to say that that can be an issue when investors are trading stocks on margin, which I'd imagine they are doing through Robinhood.
So is GameStop actually benefiting from all of these gains?
Well, I suppose the folks that have a big ownership stake have certainly benefited, especially if they're able to close out their positions with this rally underneath them. But I think that's going to be somewhat difficult. I'm not sure how the insiders are positioned or anything like that. But again, these squeezes tend to be fleeting. So I think we could see a pretty major retracement of the very impressive gains that have benefited the stock. I don't know that it's the kind of lasting gains that GameStop, of course, would really probably love to see as a company.
And Katie, how is this controversy impacting the rest of the stock market? Why are the markets overall down at the same time that we're seeing this surge for GameStop?
Well, January was a really crazy month for the equity market. There was a lot of volatility on a day-to-day basis. So I think it's somewhat unrelated that we saw the major indices fall off, except perhaps that it just contributed to added volume. The volumes were very huge this week. And I think that reflects sort of emotional trading. Emotions were certainly running high on the part of investors surrounding this issue with the short squeeze. But also more broadly, we saw a loss of short-term momentum after a very, very strong up move for the major indices, and really not just in the US, but around the world. That loss of short-term momentum is not weathered well typically by a market that can be considered overbought. And that's what we saw was a bit of a chink in the armor of the market when some of these overbought names like a Tesla, which have big footprints in the major indices, pulled back and didn't see a great reaction to their earnings report. So I think the market was prone to the pullback that was sort of inevitable there on back of this news.
All right, Katie Stockton, thank you.
Thank you.